Is Minachi. Today I'm going to talk about unit trust and fund. What is unit trust, implication, and the overall conclusion. What is unit trust? Unit trust is an Islamic unit trust or mutual fund is a type of equity fund that collected fund from investor and the pools them for invest in stocks or other investment product. The return from the investment is paid back to the investor after deducting the costs related to the fund and the administration fees or the fund's portion of the profit depending to the contract. These funds are similar to their conventional counterparts but different in the mode of financing and in the nature of their investment, which must, of course, be Sharia. All the fund will invest in a portfolio which include the asset classes which is cash or money market instrument, sukuk, local equities, regional equities, and global equities. Unit trusts also offer the opportunity to participate in the long-term performance of the stock market. Islamic unit trust scheme are required to additionally appoint a Sharia committee or to ensure their operation are in accordance with Sharia. Unit trust can invest in many financial products in conventional financial market. It's not interest based or where the element of interest could be eliminated, such as a property fund, commodities, financial options, and futures and backward transaction in foreign countries. The advantage of Islamic unit trust is they can take additional markets growth by giving opportunity to priority to equity investment in Islamic bank and financial institution, stock market of Muslim countries and companies managed under the Islamic system. The Islamic unit trust have a wide range of investment options based on growth and income, open-ended, redeemable, and so on. The investment can over international equity markets, currency, and properties. Islamic unit trusts and mutual funds are managed per one of the following three Islamic contracts. One is Mudarabah, Ijara, and Murabaha. So, implication and conclusion. A good analogy with Islamic unit trust is one of ethical and green unit trust, where the universe of investable securities is limited by certain criteria based on moral and ethical consideration. Society's increasing awareness of its environmental and social responsibilities is impacting on financial services. More and more investment based on ethical principles are now available. Some may think that the restriction imposed by ethical investment with a restrict criteria may result in a weaker performance. However, ethical funds have often matched or beaten their non-ethical counterpart. Ethical investment are generally made through managed fund such as unit trust, which specially is to seek profit for investor while conforming to certain ethical criteria such as that company is not involved in ethical like gambling, pornography, or that is does not produce or distribute alcohol, tobacco, drugs. before buying the shares of companies. It's a chosen sector. An ethical fund manager will run check on that company to find out if it is interest in a number of area according to predetermined criteria. Islamic unit trust investment are also based on specific criteria on morality. The main criteria is non-deal in transaction which involve the paying and receiving of interest. Islamic unit trust should be run on transparent and modern corporate base and up to date according and within a legal framework with the Sharia. In the same way, the decision to invest in the decision to invest in the case of ethical unit trust is made by the fund manager based on the information received from various professional bodies and specially constitute a committee of reference. The decision is the case of the Islamic unit trust is conditionally by the binding approval from the Sharia board, which consists of established religion who make a decision based on their interpretation of particular operation and context. That's all. Thank you.
Hello everyone, today I'd like to talk about Islamic Real Estate Investment Trust. Let me give a brief introduction about REITs. REITs is an investment vehicle that proposes to invest at least 50% of its total asset in real estate. It can be through a direct ownership or through a single purpose company whose principal assets comprises of real estate. REITs is first stated in US in 1960 and now operates in 29 countries. More than US 700 million market globally, and 72% of investment in REITs are located in US. REITs are trusts with the provide investors with an investment vehicle in real estate. REITs is a vehicle that owns and operates income producing real estate. Islamic REITs are collective investment scheme in real estate whose tenants operate permissible activities that are in line with Sharia principles. Permissible activities, the activities which are Sharia compliant and not related with those financial services based on interest, gambling, manufacture or sales on non-halal products, conventional insurance, entertainment activity entertainment activities not in the line with Sharia, manufacture or sales on non-halal products, conventional insurance, entertainment activity entertainment activities not in the line with Sharia, stockbroking, trading in conventional securities, hotel and resorts. Besides that, lastly, I can conclude that Islamic REITs has the potential to develop into possible investment alternative. However, following major issues need to be resolved: unity, stable regulatory framework, Sharia consequence and asset types, cross-border trading, tax benefit and double tax treatments. Thank you.
Hi Dr. Rosla, my name is Sudha and I'll be presenting on the sukuk. So the definitions of a sukuk means that sukuk is an Islamic certificate which is similar to a Western finance that compliance with Sharia, and it is also called as the bond. And moving on, the requirements of a sukuk. It should be a certificate which present as an ownership in tangible asset. Second, the payments to the investor come from after tax profit. Third, the value repaid at maturity date should follow the current market price of the underlying asset and not the original invested amount. The characteristics of a sukuk means that sukuk comes in many different forms, and one of the example is the partnership-based contract. It involves the musyarakah and mudarabah sukuk. And meanwhile, for lease-based sukuk, it involves with ijara sukuk. Parties with the sukuk is, there's three parties. One is the obligor or originator of the sukuk. Second is the special purpose vehicle, SPV, and also the investor that buy the sukuk. So these are the three parties within the sukuk. The difference between sukuk and bond is sukuk involve which is asset ownership, while bonds are more to debt obligation. Second, assets backing sukuk are Sharia compliant, whereas for bonds are riba and may finance non-Sharia compliant business. So sukuk valuation is based on the value of the asset backing them, while a bond's price is largely determined by the credit rating. So one of the form of sukuk is mudarabah sukuk. Mudarabah sukuk means that a partnership which the capital and labor are combined to create a partnership contract based on a profit. So the profit sharing, which is called mudarabah contract, which is the first party provides 100% of the capital and the other provides specialized knowledge, invest the capital and manage the investment project as well. So the partnership are basically based on profit sharing and loss bearing. So musyarakah is called as the profit and loss sharing. The elements of mudarabah sukuk is transaction should be the division of profits between two parties, in which it should be in proportional basis and cannot be a lump sum or guaranteed the return. Second element is where the investor is not liable for losses beyond the capital he has contributed. Third, the mudarib does not share in the loss except in terms of loss of his time and effort. So as you can see, these are the structure. This is the structure of a sukuk for mudarabah. So the first one, it shows that there's a project. So the mudarib, which is called as known as the person who performs the work, he or she will agree to have an agreement with project owner for a project, or example like a construction. So then second stage is where it involves where the mudarib issues sukuk or agreement with Islamic Sharia to raise funds. Third, the mudarib collects the profit payments and final capital proceed from project activity for onward distribution to investor. Lastly, once the work or project is completed, the mudarib hands over the finished project to the owner.
Hi, my name is Puan. So I'll be presenting on another form of sukuk, which is ijara sukuk. So what is ijara sukuk? Basically, it just means is giving something on rent or lease. So most applicable is like lease contract can be used here. Okay. So so when this ijara sukuk is being used, so most likely the ijara sukuk is used to employ the service of an individual with wages as a consideration the service the individual will provide. Okay. Besides being known as a lease contract, okay, lease contract here is according to a party purchase and lease of equipment required by the client for a rental fee. So duration of the rental and the fee agreed in advance, and ownership of the asset remains with leaser. Alright, so what is the elements here that ijara sukuk has? So one of it is offer and acceptance, contracting parties and subject matter. Now, as we all know, common law is the oldest law where contracts are being formed in offer and acceptance. So ijara, what is the difference is it doesn't have, it prohibits the Islam's element. Alright, so contracting parties further provide definition of leaser as the owner of the asset and lessee as the party who benefit from the usage of asset. Now, as we move on, we can see the diagram over here, which explains the entire of the ijara sukuk. Alright, Now, as my partner has mentioned earlier, SPV is special purpose vehicle. Now, so what happened here, as you can see, the titles to assets. The obligator sells certain assets to the special purpose vehicle at an agreed, predetermined purchase price. Alright. Second point here, 2A, as you can see here, sukuk proceeds. Okay. So from sukuk holder, it goes to SPV. So the SPV raises financing by issuing sukuk certificate in an amount equal to the purchase price. This is passed on to the obligator as seller. Okay. Now number 3, where you can see the lease agreement. Okay. A lease agreement is signed between the SPV and the obligator for a fixed period, where the obligator leases back the asset as lessee. Okay. And number 4 indicates periodic rental and capital amount payments, and periodic rentals and capital amount distribution. So SPV receives periodic rental from the obligator, and these are distributed among the investors, who are acting as sukuk holders. Now, at maturity or on dissolution of event, the SPV sells the assets back to the seller at a predetermined value. The value should be equal to any amount still owed under the terms of. Yeah, moving on, we'll be talking about the prohibition. Alright. Now, the prohibition have these 3 elements: prohibited to have interest, prohibition of maisir, and qarar. So all these are part of the element of any products in the Islamic finance going to offer to any of its consumer. Now, when you apply this in sukuk, okay, so prohibition of interest, okay, in mudarabah, it should consist of property which can serve as capital, and rab al-mal have no control over the capital provided. Okay, so the capital that being provided cannot be guaranteed by mudarib. This is because the mudarib is a trustee in respect of the capital, and they are not capital investors. Okay, and the losses should be borne by the capital provided by rab al-mal, except in the case of breach of requirement of trust, such as misuse and negligence. Okay, now prohibition of maisir and qarar also can be seen in ijara sukuk. Okay, where especially those who are offering consideration must be given for rent, and the amount of rent should be known to avoid uncertainty. Okay, so besides that, to eliminate other forms of prohibitions, okay, they have to properly declare, okay, of statement of the nature and method of service offered are included, okay, especially in the ijara sukuk. Okay, so in conclusion, all these products, especially like sukuk, we have a lot of challenges, especially when Islamic finance is a niche market. But due to the growing population of Muslim population, especially in China and India, where they have the biggest economy in the world and one of the fastest growing economy, the outlook is very good, and especially with the potential of Islamic finance, which been widely being embraced by a lot of people, especially the non-Muslims, help to prosper. So my point is, there's a lot of potential in this product, especially when it complies with the Sharia, and there's so much of governance in there. Alright, and the main thing is they protect the shareholders' value. So thus, it's one of the good products, and the implication of this prohibition can be associated to the potential of Islamic finance. Thank you.